if you look anywhere across the globe, unfortunately, whether it be in the Middle East, there's still a war going on in Ukraine. And even more broadly speaking, there's a lot of tension between the US and China, especially as it pertains to Taiwan. So in my mind, I'm looking at all of that and thinking that any one of those could emerge as a significant driver of gold going forward this year. Like you mentioned, what may be more telling is what governments are doing, and they're buying gold at record numbers. They're slowly also divesting themselves of the US dollar. I think if you look at now, around 55% of foreign exchange reserves held by non-central banks is US dollars. That's like a record low, where at the same time, if you look at 2018, non-US central banks had about a 10% allocation to gold, and that's now up to about 16%. So slowly getting away from the dollar and going into gold. I can tell you that probably the combined force of all the bullion dealers in the United States would really struggle to keep up with demand. So that would really be something else.
Welcome to Capital Cosm, everybody. Today we've got Levi Gunter from One Gold. Levi, thanks for coming on, my friend.
Thanks for having me on, Danny.
As always, guys, nothing in this video is financial advice. Please do your own due diligence. And Levi, for those who may not know who you are, this is your maiden voyage on the show. So
Yes.
Give us a little bit of an intro. Who are you?
Yeah, happy to do it. Again, thanks for having me on. But yeah, I'm the sales and marketing manager here at One Gold. One Gold is a company that was launched about 6 years ago now by two names that your audience may or may not recognize. So APMEX and Sprott, excuse me. But yeah, APMEX is like the largest physical precious metals retailer here in the US. They've been in business for about 24 years now. They've done about 18 billion in sales. So they're kind of one of the more recognizable names in the physical retail space. And then on the other side, you have Sprott, and they're actually an alternative asset manager out of Canada. And they've been in business for over 30 years now. They're mostly known for gold and silver ETFs. So two really trusted names kind of partnered about 6 years ago to form One Gold, which the goal with that was to kind of form a more kind of modern, intuitive, cost-effective means of actually owning precious metals. So with One Gold, our customers just download a mobile app or create an account online, and then they can buy gold, silver, and platinum and have it stored in vaults around the world. So here in the US, Canada, Switzerland, and the United Kingdom. And so that was kind of the intent behind One Gold. And like I said, I had been here for about 6 years now. And yeah.
Excellent. Well, hey, let's just dive right in. What is kind of like your 75,000 foot view of the gold and silver market? And if you want to go, even broader, the economy.
Sure. In terms of gold and silver, gosh, there's a lot there. I'd probably start with gold. To a large degree, I think gold this year has really kind of outperformed the narrative that said, yeah, last year was great for gold. It gained, I think, 13%. It was its best year since 2020. But in order to really sustain that, I think folks were under the impression that gold really needed interest rate cuts this year. And so far, what we've seen, I realize we're about halfway through the year now, what we've seen is gold really kind of defy that. So I think it's up if I look at it today, around 12.5 to 13%. And all the while, the odds of rate cuts are kind of being diminished. I think when we started the year, we were forecasted for multiple rate cuts, and now we're kind of down to maybe one, which is sort of a question mark at this point. And gold's done great, even in the face of that. And I think that's primarily due to some of the same factors that supported gold last year, in terms of geopolitical events and even robust central bank buying. So looking at this year, geopolitically speaking, right around the time that gold reached new all-time highs, I think the first time happened in April. That was right on the heels of the attack from Iran onto Israel. At that time, there was kind of some concerns about that regional conflict going more global, and that was supportive of gold. Things kind of calmed down in the region. And then again in May, something similar happened where you had, I believe it was a helicopter crash or something in Iran where their president was actually killed. And again, gold refreshed a new all-time high. That time, I think it was around 24.50. So what we've seen so far this year, again, geopolitical events have been key. I don't really see that slowing down. Just if you look anywhere across the globe, unfortunately, whether it be in the Middle East, there's still a war going on in Ukraine. And even more broadly speaking, there's a lot of tension between the US and China, especially as it pertains to Taiwan. So in my mind, I'm looking at all of that and thinking that any one of those could emerge as a significant driver of gold going forward this year. And I mentioned central bank buying as well. So central banks have been buying gold at record numbers the past couple of years. And again, I don't see that slowing. Mostly, I think actually the Chinese paused their purchases of gold as of last month, mostly due to price sensitivity. But again, both of those have supported gold this year. I think, like I said, it's largely outperformed that narrative that you need rate cuts. And yeah, we'll see what the rest of the year has to hold. If I pivot a little to silver, it had obviously a lackluster year last year. It really didn't do anything. This year, it's kind of made up to large degree. I think it's up, if I look at it today, around 23%. And for a lot of the same reasons, often silver and gold have similar drivers. So nothing really new there. I think what I like to look at in silver is kind of that industrial component. And I think that it can be supportive of silver. I mentioned central banks buying gold earlier. They don't buy silver. So instead of that, silver has a robust industrial demand, which the past few years has accounted for a little over half of total silver demand. And that's forecasted, that being industrial demand, forecasted to increase even more this year, all while production is forecasted to drop by another, I think, 1 to 2%. And that takes into consideration mining and discovery and everything else. So what that does is it kind of widens that physical silver deficit that we've been dealing with for the past 3 years. I think right now it's something around 215 million ounces or so. So not an insignificant number. So to me, I'm looking at that as a potential driver for silver for the rest of this year. But again, like gold, I think it's kind of largely outperformed the narrative that we had going into this year.
Right. And to add more fuel to the fire, when you did have that Iran strike on Israel a few months back, the crypto that tracks gold, I can't remember its actual ticker symbol, but there's a crypto coin that tracked gold,
Mhm.
and it shot up to an equivalent of about $3,000 gold for a brief moment in time during the
Right.
midst of that event. Of course, the attack happened on the weekend, so the market was closed.
Yeah.
It kind of begs the question, what if the market wasn't closed? You have these black swan event, or for lack of a better term, black swan events, or just really kinetic events. They all seem to occur during the weekend. But
Yeah.
what if one day they occur during the week? And that's where you can see these crazy moves in gold, because gold, and correct me if I'm wrong, it's more of a crisis hedge than it is an inflation. Don't get me wrong, it is an inflation hedge, but it responds even faster and more robustly to crisis, right?
Yeah, you hit the nail on the head there. Crisis, it responds much faster there. It is sort of an inflation hedge, but kind of, intuitively you would think that too, like gold is a natural hedge against inflation, which it is. However, it is kind of sensitive to higher interest rates, which we tend to hike interest rates in a higher inflation environment. So that's more of kind of a long-term play. But as you mentioned, you have sort of these unexpected events geopolitically or in other realms that really kind of drive gold in the short term.
Yeah, so I want to reference this chart. So this is from the World Gold Council, and it asks various central banks what factored into their influence in holding gold. And you want to know what the top three reasons were?
I can tell you the number one, I think 70% of respondents to that survey said it was a part of a longer trend of de-dollarization, right? I think that was the one that stood out to me.
Yeah, so what they got here is number one, and no default risk,
Yeah.
right? Number two, performance during times of crisis,
Hmm.
and then number three, it's historical precedent.
Sure.
But yeah, I mean, there you go. And then number four is long-term store of value and inflation hedge. So, pretty much spot on with what we just talked about. You mentioned the Fed not having cut rates, not even a single time thus far. You are starting to see cracks in the wall, so to speak, with the various other central banks. However, the ECB, the BOC, Both came out the other week. They are planning on cutting rates by a measly 25 basis points,
Yep.
but it's a start, right? This is how you re-enter this low interest rate environment slowly then all at once. But the question is, can the Fed really hold out for much longer without cutting interest rates? Or and once they do start cutting rates, considering the fact that gold has performed so well and silver too has performed so well in this higher for longer rate environment, I mean, it's going to be like a dam bursting when they start cutting rates for the price of gold, right? Do you think?
Yeah, I think so. And to your earlier question, obviously a pivot would be significant for gold, and a pivot could be a rate cut. So, and if I look at, I like to look at the CME Fed Watch tool, and that kind of gives you sort of odds of rate cuts as you go throughout the year. And I think right now September is kind of a coin toss. And so I think they penciled in maybe one rate cut this year. On the same token, inflation's been sticky. You could see some parallels to where we are now, almost to where we were in the 70s, where inflation really hung around for a long period of time. The Fed really thought they had that under control, and you kind of had this second round. It really kind of proves difficult to get below their kind of target rate of 2%. And that's kind of a timely question because I think at the last release of the Fed minutes, it seemed that there was some officials here at the Fed here in the US that were willing to consider the idea of cutting rates before inflation gets down below their kind of target of 2%. And in my mind, you're almost going to have to do that if you want to cut rates this year. And that would be an even more significant pivot than just a rate cut, is if you've now had this narrative for years now saying we're not going to cut interest rates until inflation drops below X. And then you kind of go back on that and you cut rates before we're there. That would be a significant pivot, and I think extremely bullish for gold for sure.
Yeah, and again, to add more fuel to the fire, gold has been making all-time highs. Silver has been making decade-long highs, despite the sharpest rate hiking cycle in history. I mean, people forget we were at 0% a couple years back. Now we're at 5.5, right? You map this growth, this rate hiking cycle against any other cycle throughout history. Nowhere else did you see a rapid move up in Fed funds rate or any interest rates set by any central bank across the globe. So
Right.
to see this robust move in resilience in gold and even making new all-time highs, I mean that's really telling. I mean you've got the central banks buying it. If they're buying it, I mean these guys aren't schmucks. I mean, yeah, they're pretty central planners are suboptimal people,
Yeah.
but but to put it lightly, but they also have insider knowledge and have a lay of the land in terms of where things are swinging towards.
Right.
My question to you is, you do have these central bankers buying gold, but to the average person, someone who's making 100 grand a year,
Mhm.
50,000 a year, 200,000 a year, whatever, um, what should be, how should they, what are some of the checklist items that they should look at, before deciding to buy an allocation of gold or silver? Like, how do they decide between the two, do you think?
Yeah, that's a really good point. For me personally, I look at cost, and not even just cost in terms of the current spot price, but premiums is actually a big one. It's not something that's top of mind, especially for a lot of new investors. In other words, I want to kind of invest in the metal price and not the premium, which is sort of that price that you pay above the current spot price for gold or silver. That's kind of the consideration that I take into mind. And since really 2020, we've kind of been in an elevated premium environment for your commonly traded retail products, especially silver. And so, that's kind of a solution that One Gold offers to some degree. So, like I mentioned, we sell vaulted precious metals, which allows us to sell at really low premium. So, like 80 basis points for gold and about 2% for silver. So that's certainly a consideration for me. In terms of like just looking at the metal itself, I can tell you what I hear anecdotally from a lot of our customers, which we like to engage with regularly, is, they view gold and silver very similarly, both kind of monetary metals. Gold's kind of that long-term sort of trusted hedge. Silver is similar, but it also has that industrial component that I mentioned earlier. So a lot of folks kind of view silver similarly, but maybe a metal with the potential with a little more upside, right? So I think they're very similar. Most people that I see come on to our platform tend to favor gold, but also, if you're looking at folks who are putting in 6 or 7 figures, most of those actually put money into both gold and silver.
Yeah, yeah. So the reason why these central bankers are hoarding gold is, we went through the list of reasons, but there's also
Yeah,
this anticipation of a currency reset, right? You've got the sovereign debt crisis, you've got
right.
35 trillion plus in sovereign debt here in the United States, 150 trillion dollars when you account for the unfunded liabilities, and then you've got this huge derivatives, you've got sovereign debt crises all over the place, not just here in the United States, all over the place. So,
Mhm.
um, we are going to see a currency reset at some point, and gold is going to play a significant component to that. How does gold fit into whatever the BRICS are doing with their settlement currency coming down the pike, and then also what's happening here in the West?
Yeah, great question. I think gold really kind of maintains its role that it's had for thousands of years. Like I mentioned, it's kind of been the most trusted form of currency and hedge for a long time now. And anecdotally, we hear that from customers. Hey, especially new folks, why are you buying gold? I'm not comfortable with the dollar right now, or holding funds in the bank. But like you mentioned, what may be more telling is what governments are doing, and they're buying gold at record numbers. They're slowly also divesting themselves of the US dollar. I think if you look at now, around 55% of foreign exchange reserves held by non-central banks is US dollars. That's like a record low. Where at the same time, if you look at 2018, non-US central banks had about a 10% allocation to gold, and that's now up to about 16%. So slowly getting away from the dollar and going into gold. This whole kind of de-dollarization process, yeah, it's very concerning, especially if you're here in the US, in terms of, purchasing power, exchange rate fluctuations. That's probably an entirely different conversation. So it's something you should be mindful of, but it's also, it's not an overnight process. Even if you look historically, what happened with the pound sterling, it's typically a multi-decade process.
Mm.
So it's not clear to me kind of what the next runner up would be, if it's something that BRICS puts forth, or whomever else. So all that to say, it's not an overnight process, something that definitely people should be concerned about, especially here in the US. But to answer your original question, I think gold really maintains the role that it's had for thousands of years, and you see that spelled out in terms of what governments are doing. I think in the same survey you had cited earlier from the World Gold Council, about 80% of central banks who responded to that indicated that they don't plan on slowing down their gold purchases anytime soon. So yeah, I think it's a part of a really long-term process.
To stick on this government's buying gold story, China has been buying more and more gold as time goes on. They've also been um, lessening their treasury holdings. Some might say they're not selling their treasury holding; their treasury holding just losing in value. They may not just be adding on at the same rate they
Right.
were before. But the question is, um, what what's stopping like a country from China? What's stopping a Russia from just adopting a gold standard and just completely exposing the dollar, or the fiat currency that it is? I had Alistair McLeod on the show kind of explain this to me. He
Yeah.
said that they could, if Russia wanted to, they could go on a gold standard and it could effectively end the war over there in Ukraine. So what's kind of like holding them back, do you think?
Yeah, to be honest, I'm not sure. That's a really good question. I think that in the case of China, they hold a massive amount of U.S. debt. So that would be one thing. And like I said, you're kind of seeing them slowly kind of move away from that. To adopt an actual gold standard is going to require, a lot of gold too. So, but in terms of the specifics and why they haven't done it yet, I don't know. It's clear why they're moving in that direction, which is, we've kind of weaponized the dollar, which you really, in my mind, probably shouldn't do if it's supposed to be the world's reserve currency. So you really saw a shift in 2022 when that happened from, foreign banks holding a large amount of USD to now kind of moving away from that. And what's stopping them from doing that more rapidly. I'm not entirely sure.
Okay. Well, another major geopolitical event that transpired over the course of the last couple of weeks was the quiet ending of the petrodollar. Any insights on what that portends to the dollar, what that portends to the price of gold moving forward? I just find it extremely odd. Very minimal coverage of this petrodollar ending. I mean, of course, you see headlines here and there on some of the alt finance YouTube channels, but you don't really see any major headlines being made out on CNBC or Fox Business or any of these other mainstream channels. Why do you think that is?
Yeah, that's a really good question again. I don't know. I mean, I think that it can be kind of a really long-term process. I think that we're also seeing sort of the world divided up into two realms. You kind of have the East, specifically comprised of China and Russia, who are now trading with each other more than they ever have, at least within the past 100 years or so. And then now you have folks in the West who are still using USD to large degree. So we're kind of living in our own world here, and that may be why it's not making headlines, albeit probably should, because it's a pretty significant event.
So, an often cited ratio that gold investors and silver investors use is the gold to silver ratio.
Mhm.
Explain where we are in the gold to silver ratio right now and what it means for
Yeah,
investors.
interesting question. And I'm sure pretty much everyone in your audience is familiar with what the gold to silver ratio is, but in case somebody isn't, it's really just a measure of how many ounces of silver it would take to buy 1 ounce of gold. So in other words, if I were to use round numbers just on the fly, if the current spot price of gold is at 2,000 and silver is at 25, I would divide the gold spot price by silver, and that would give me 80, I think. So that would be the current gold to silver ratio. That's been a relevant topic for thousands of years, actually. I mean, you could look back to ancient Egypt, and even the government at that time mandated a gold to silver ratio. I think it was like 2.5 to 1 or something really low, and the Romans did something similar. Um, and to me, I look at it, and some of the things you often hear associated with the gold silver ratio is, oh, obviously silver's undervalued. And I agree to that to some extent, but also I think you have to take into consideration where we are in history. So I look at gold to silver ratio differently over the course of time. So to me, things changed a lot in 1971, I believe, when we left the gold standard and went to fiat money. And around the same time in the 60s and 70s, you first had gold and futures trading available to the public. And those things drastically affected the gold and silver market. And also, if you look at the average gold to silver ratio for anything, basically 1974 to present, it's about 60. And for the 50 years kind of preceding 1974, the average was about 25. So for me, I kind of look at 1974 on, and I use it kind of as an indicator, right? And it's pretty clear what happens when that gold to silver ratio gets kind of in the 90s, is it tends to snap back pretty quickly. And that's happened a handful of times here in recent history. I think the highest it ever got was in probably the first quarter of 2020. Around March, there was a massive sell-off, and silver was around $11 an ounce. But then more recently, it's gotten up into the 90s a couple times, and like I said, it tends to really kind of retract from there pretty quickly. So for me, when I see gold to silver ratio in the 90s, that almost signals that it may be a good time to buy silver. It's done that a few times in the past couple of years. I think recently it was around probably August of 22 when it was in the 90s. And then within the same month, I think silver jumped by about 25%. And then you saw something similar earlier this year where it was in the high 80s to low 90s, and silver jumped about 23%, which is kind of where it is today. So like I said, it's been a really kind of relevant metric for a long time. That's kind of how I view it, though, overall.
Yeah. So when the gold to silver ratio goes down, i.e., silver outperforms gold, that's usually your telltale sign that you're in a precious metals bull market. Is there ever a case where the gold to silver ratio goes up and you're in overall gold to silver bull market in the sense that silver is rising, but rising at a slower rate than gold. Because my understanding is that when you are in these PM bull markets, capital is more confident enough to go down the risk curve, which the next step down below is silver, right below gold.
Yep.
So, is that kind of your assessment as well?
I think so overall. Now there are times where the price of gold and silver will diverge. You know, they do have different drivers at time. I mentioned central bank buying earlier. The past few years, that's accounted for about a little over half of total gold demand, where that doesn't exist for silver, but you have that industrial component. So sometimes silver will kind of trend, ebb and flow a little bit more with the economy. So if there's a slowdown in the economy, industrial demand will slow down as well. So sometimes you'll see that reflected as well in the gold to silver ratio, but generally they do trend to track together, and you can kind of see that reflected in the ratio.
Yeah. So what would you say should be on the radar screen? What should be front and center for gold and silver investors right now? With all the things going on in the world, everything going on in the markets, what should be front and center, do you think?
Yeah, I think debt and deficits are huge. I also think that, you know, I don't really get into technical aspect too much because for me, it's kind of a long-term play. So if you are buying, you know, I think premiums are of a massive consideration as well. Liquidity is a huge consideration, but if you're looking at kind of comparing the two, I think they're very similar. They serve a similar function. I personally tend to buy a little bit of both, but if I'm buying them, it's more of a long-term hedge against kind of uncertainty and wealth preservation. So, kind of the day-to-day things that tend to drive, you know, intraday changes and such. You know, Fed updates, employment numbers and such. I don't pay a lot of attention to because I'm not really a speculator. So if you're in it for the long term, I like to look at those kind of core things like premiums, liquidity, and kind of the security aspect as well.
Yeah. I'm going to cite another statistic, which I'm sure you're well familiar with, and that is the percent of gold to total global asset allocation is like sub 1%, right? And that
Yeah.
includes gold equities in the mix and everything. So
Mm.
all the money that, like the gold market cap, everything is
Yep.
less, around 1%. In the 80s, it was 26%. In the
Yeah.
70s, it was 30 some odd percent. Um, a return to mean would be insane. Not saying that it will return back to those 20,
Right.
30% levels, but even a move from 1% to 2%, 3%, 4%, 5%. I mean, that's in the case of a 1 to 2% move, that's a doubling.
Yes.
So how easily can gold double from here, do you think? Or just go completely beyond the levels that we're at now?
Yeah, great question. I think that it would take a lot. I mean, gold, in my view, obviously I'm a little bit biased, but I think it's been under-owned, especially here in the US for a long time. And I think it would take some sort of catalyzing event, economically or geopolitically speaking, to really get a doubling there, which, like you said, that would be massive. And even if it were to be like around 5 to 7%, I can tell you that probably the combined force of all the bullion dealers in the United States would really struggle to keep up with demand. So that would really be something else. But to answer your question, I think it would take some kind of catalyzing event, especially in terms of, you know, a currency shakeup or something like that. In my mind, that's kind of the likely event that would precede really a massive increase in gold ownership.
Yeah. Yeah. So when people look at the price of gold, they see $2,300, they see $2,400. They may not be able to buy, in that amount.
Yeah.
That's why they go towards silver. That's why silver is kind of like a lagging um, brother or little brother or little sister
Sure.
to gold. Um, when the price of gold goes up, wh- ha- so silver has the torque. So gold is the leading indicator, silver is the lagging indicator. Is that what
Right.
you would also describe it?
Yes.
But I think through you guys, people can buy $20 worth of gold,
Mhm.
$30 worth of gold. So you don't necessarily need that that $2,400,
Right.
whatever plus premium is. So if you want to talk about that, feel free to.
Yeah, yeah. I mean, I could tell you when I first, you know, when I was young, I kind of was interested in coin collecting and investing in precious metals. and I didn't have the money to buy gold at the time, and it wouldn't have made any sense to buy fractional gold because historically, if you're buying physical fractional gold, you're paying a significant premium or a significant amount above the current spot price. So yeah, with One Gold, we do kind of have a tool where you could address that. So it doesn't really matter the amount you buy. You could buy $20 of gold or $1 million worth of gold. It's basically 80 basis points over the current spot price, and allows you to kind of dollar cost average in over time. And there's a feature we have called auto invest. So if you wanted to say put $500 of gold or $500 into gold each month, basically you could create an order that would execute automatically according to that. And what it does, again, it allows you to build up over time a gold and silver backed savings. You can dollar cost average in without giving up too much in terms of the premium. So yeah, that's been a great tool for a lot of our customers.
Yeah, yeah. And what would you say to kind of close things out before we wrap things up? What are some of your concluding thoughts for gold and silver buyers out there?
Yeah, I'm pretty bullish on it at the moment still, even considering the current interest rate environment. I think there are a lot of kind of potential catalysts just waiting in the wing. Even if there weren't, I'm kind of one who puts a little bit towards gold and silver on a regular basis as kind of a hedge. But if you're even speculating, I think I'm pretty bullish on it going forward. Just if you look at, what's going on globally, what's going on with the currency, debt and deficits, all of these things point to a higher gold and silver price.
Yeah, and tell us more about One Gold before we wrap things up.
Yeah, so happy to talk a little bit about that. So as I mentioned earlier, it's kind of a more modern platform. You can actually buy physical metal that's stored in a vault for you. It basically allows you to trade 24/7. You can use sort of unique investment tools, like I mentioned, auto invest earlier. We even have limit orders. So, if you think gold's going to drop to $2,100 an ounce next week, you could put in a limit order that would automatically buy gold at that point. Or sell gold and silver automatically if you foresee prices going up, something like that. We also offer the bullion card, which is actually a precious metals rewards credit card. So instead of actually spending your metal, you can earn rewards in gold and silver using the bullion card. So like I said, it's kind of a more modern tool. It was launched by really trusted industry leaders, APMEX and Sprott. We've been around for about 6 years now. It's gained a lot of traction. We've had over 1 billion in transactions since then. So I think it really resonates with a lot of folks who are new to the industry, but also those who also own physical metal. So I have been an end user for a long time and investing in metals for a long time. I enjoy the platform. So, but yeah, even if you're not in the market, I think it's a good sort of source to market. We provide market news and updates and price alerts and things like this. So yeah, you could always check it out. It's onegold.com. So onegold.com, or you could download the app for free in the Apple or the Google Play Store.
Great. Well, we will have that link down below in the description box. So check it out. Check out One Gold, guys. And if you enjoyed this content, be sure to hit that like button. Subscribe to the channel if you haven't already. 87% of you guys who watch this channel are still not subscribed. So if you're getting value out of these videos, be sure to hit that subscribe button and comment, go Levi, go in the comments. If you enjoyed this interview, we'll be sure to do more, hopefully. And yeah, guys, I will catch you in the next episode. Bye, y'all.